Yeah, welcome everybody. This is our legacy study group, study circle. It is Sunday, August 31st. Uh, actually, you know what? We are missing one person that's always here. Let me just send a message to make sure everything is fine. And it's Dr. Latrice. Dr. Latrice is always here. And if not, we'll say, oh, she's doing well. The- All right, perfect. Okay, guys. So yeah, we're gonna have a great session today. This is actually the chart that we left with last week. This was our weekly markup last week. Would you look at that, guys? As always, right? These calls are for educational purposes only. Any trade idea or suggestion is pure speculation, and all the good stuff that comes along with the disclaimers. But yeah, guys, this is the setup, the markup that we have last week, and it was just doing the top down analysis that we do. Okay, doing the top down analysis that we do from the weekly 4 hour, 1 hour, and then kind of just everything else in between. But other than that, we're gonna go through this again so you guys can know this markup. I think last Sunday's right was where we had all those rules kind of listed. And then we'll share them again here as well, as we do the top down analysis and so forth. But just a kind of quick what do you call not announcement, I guess you can say, but just kind of give you guys an idea of how, kind of
Overview.
overview. Thank you, Dr. Just an overview and scenario about, we got new people in the group. Thank you guys for joining. Basically, this legacy study group or this private group that we have, right, is something that you won't lose access to. Okay, it's something that you won't lose access to. However, the right, just know, what it does offer. It's going to offer our Wednesday sessions. It's going to offer our Sunday study group sessions, and it's also going to give you access to the S&T indicator, plus wherever we're at, either Discord or WhatsApp, is going to give you access to that support group. We make a lot of friends, and they become we meet a lot of people. They become friends, and then eventually become family when you learn how to trade. And I just felt that I was talking to my wife. It's like um I was telling my wife that it's like it's just not fair. It just sucks that you know they're only your friends if they pay a subscription. And I was like, no, I don't prefer that. So that's why this group was created this way, where it's like, hey, we're connected together when trading, and as long as trading is something you want to do, we're you're in the club permanently. When I say lifetime, right? Obviously, forever as long as I want to do this, which I don't think that's ever going to go away. But that's what it is, right? So this particular legacy calls for that. Obviously, I am part of the Yes Academy. I'm contracted there to provide my services. I will be only kind of offering subscriptions through there moving forward. But once I open up this offer again, whoever gets in through my side directly, right? Well, I always have that permanent access. Inside of the Yes Academy, right? I am going to offer them people a chance to kind of come in for a cost. It won't cost you guys anything. You guys are, like I mentioned, you guys are in. However, right, just because of the format, it is limited access. For maybe 5 months or 6 months. They will get the same services you guys have, additional to whatever they're signed up for, right? But that's why I don't want to say that when I was promoting this, right? Um, but y'all can spread the word if I want. Okay, y'all can spread the word if you want. If you know somebody that could benefit from this, just kind of a long-term thing, we'll do that. But I'll clean that announcement up a little bit better. Once I promote and start offering this group inside of the Yes or Yes Academy, and you'll clean up better. But let's go ahead and review. Let's go ahead and review what happened last week. If you guys are ready to go, give me what we used to put. We could put a legacy group or LG or whatever, right? Let's go ahead and get focused in. Ready, something. Let me just take one more sip of my coffee here. Alrighty. So this is the markup that we had last week. The edge of these lines, right, represent the start of that week. But let's go to the higher time frame session view to see what really happened, right? There goes last week. I was start from the 4 hour. Okay. We just simply, guys, grabbed the high and the low from the previous weekly candlestick. That's literally all we did. Low and high, high and low. The open's important. Sometimes I forget because it depends how low it is. But that's all we did. From here, we went to the 4 hour chart. And what's inside of this gray frame is the week. What's outside is the current week that just passed, right? All we did, right, was fibbed or measured from low to high. So the lowest area to the highest area, which is the previous weekly low and the previous weekly high, right? That's all we did with the fib. And as always, right, in order for us to be very well oriented in trading, we ask those three questions, right? One, where is price going? Okay, where is it going? Two, where are we at now? And then three, how do I enter? Those are the three things those are my three speculation questions. Where are we going, right? Well, this helps us create targets, a destination, right? Now let's just see, okay, how what's the conditions right now, right? What's the conditions right now? Should I wait? Should I enter now? Those things. And then lastly, right, is our entry. How do we enter this market? How do we, what strategy do we use? Do we enter off an ETM candle? Do we enter off of the momentum boxes? Do we enter off of fair value gaps or imbalances type of things, right? And then obviously all this, you manage your risk and lot size and everything. But these three questions, in my opinion, are the most important thing to really help us speculate, right? And to summarize what happened last week, all that happened was price rejected the 38%. If we would have bought from the 38% to at least the negative 1.8, what is it called? The negative on the weekly scale, the negative 18%. That is a $37 increase, right, guys? $37 increase, at least to there. And gold, which is 370 pips, correct? We just had a buy limit at 38%, which the price line, let me just be more specific there. Prices, and let me just move to the right. Right. And let me just to make it as easy as possible for visual purposes, I'm just going to have on those important levels on, and that's it. All right, guys, there it is. Okay. You can move this here. All righty. And see, Prachi, these are the good, great question there. Prachi's asking, once we enter a trade, do you hold it or close it and re-enter again at some point? She messaged that one directly to me. But yeah, excuse me, one thing. Um, that's that's a great point here, right? Because what I would love to say, guys, is like, hey, we got this whole trade, right? But we did it. Well, I know I did it. I know Andy was hunting gold all week long. I mean, I had a good conversation all week long, and it's yeah, okay. But yeah, guys, so it's like it's more about Prachi about training our eye to see this movement because this movement happens fractally over and over and over again, just in different scales. And what is repeating fractally over and over again, just in different scales? Well, the movement that we just talked about impulse, low to high, measure it with the fib, enter at the retracement zones, take profit at the extensions. That happens over and over and over again, just in different scales. Okay. So the plan for this one was okay, let's just put a buy limit there at 33.50. Let's call it 33.54. Okay. And we take profit at 33.92. Let's call it 90, right? And I think we already measured that, which is like 30 something, $37 or something like that. Yeah, 37 bucks, which is 370 pips, right? And that's a lot of pips. I mean, but here's the thing, guys, right? Price goes up, pulls down, goes up, pulls down, pulls up, pulls down. So at what point in time are we like, man, I don't want to lose this position. If you did enter off that wick, I don't want to lose that position. How close do you trail your stop loss? You know, and how many times you took partials, if you're taking partials and so forth. But again, anywhere in between, this week, in my opinion, there were no sales at all. Okay. There were no sells at all. And again, Nico, on that note, you don't have to what's it called? Hold. What we do have to do though, right, is for example, like what I just said, we shouldn't even look for sales this week. Hindsight is 2020, right? We shouldn't even look for sales. We should just focus on the buy to Dubai, and that's it. Okay. We should just focus on that. And necessarily we don't have to swing. Swanandi, he's more of a swing trader. He's tried to hold gold before, and he's been up. Oh, there you go, Nico. uh, he tries to hold gold. He tells me hold gold, and just those pullbacks hurt. He made pullback hurt, and again, I mean that's really good. And he got $1,000 on sales. Um, let me turn this off. All right, let's kind of just focus over here on this little calculator. Um, all right, so it moved 370 pips, right? A full standard will give us $3,700, right? And look, you made 1,000, you made a third of that almost, just a fourth, have a fourth on a sale. And this is us holding, right? This is us holding from 38% to negative 18%. If you was your lot size one standard lot size, Aniko? Just curious. But no, 0.25. Look at that. And you made about just shy of a fourth of the entire movement. So again, right, holding trades longer doesn't say that we're better traders. Holding trades longer doesn't say that we're going to make more money. Doesn't mean that we're going to make more money. As long as you know how to capitalize on pit movement, 30, 50, 90 pips with the right lot size, you can make money. You can make money. Okay. And that's all that matters, right? That's all that matters. I think sometimes, you know, like I always mention, right, getting the Instagram entry gets more hype than making money. Holding the trade longer makes more hype than capitalizing. If I put in there a 0.25, that is $925. So look at that. You took it sell. I'm assuming it was just a 1 day sale, Nico, or was it a multiple day sale? But in order for you to make this is 0.20, 0.25 multiple, 0.25 on the entire movement from 38% to negative 18%. Let's see how many days that took. It took from when it wicked Tuesday, Wednesday. So yeah, hit it Wednesday right there. Hit it right there. Took 2 days. Took 2 days. Okay. Took 2 days. And there it is. So like in these scenarios, Nico, right? It's like if you see a sell, scalp it, take profit. But if you get into a buy, that's the one you hold, right? Or that's the one you at least go for 200 pips. Double the 30, 50, 90 scenario, right? But again, though, if you're much better at taking your money and run, having that strategy like, oh, I gotta hold one for 200 pips is not gonna is just not gonna fit. It's just you won't be able to operate properly, in my opinion. Okay. Now, knowing which direction is the trend, if you buy and you kind of get stuck in drawdown, you can hold that drawdown a little bit longer because we're in the bullish trend, if that makes sense. That is true too. And having more frequent trades can be more stressful. So I'm working towards, yeah, that is one um yeah, we do. That's one thing that we definitely want to get to, right? Is peace of mind, finding peace of mind in general, right? When these trades. But yeah, that was the mark of this week, guys. And again, right? Remember, previous weekly low, previous weekly high, fib it, came to 38%, went to the extensions. Okay. Let's review what happened Tuesday, Wednesday, Thursday, and Friday. All right. And check this out. Is the same markup. You look for a control day or a strong day. Okay, and there it is, right? Then it goes Tuesdays, high and low. So that's a previous daily high now, previous daily high. And then this is a previous daily low, correct? Did not copy. As so. You fib that, low to high. Our entry zone is anywhere below the 38, 23%, in between the 38, 50, and 61, sometimes 78%, right? And then our take profit is where? At the extensions. You hit go, price comes into the entry zone, and this one did not hit take profit, but it ended up you ended up in blue. All right, no problem. Let's walk the days forward. All right, now we're going to go to the previous daily high of Wednesday, and there goes the previous daily lows. You adjust your fib to that high and to this low, right? And same thing. The entry zones are in those levels right there. Right there, and then your entry zone is there. And then you hit play, comes into the entry zone, takes profit. Monday, Tuesday, Wednesday, Thursday. There it is. New day comes on. You get the low, you get the high. You readjust your fib to that high and that low. Okay. You readjust your take profit to that extension. And once again, right? That's the entry zone. And you take it back up. There it is. And there it goes. See how that repeats itself over and over and over and over again, guys? Why I'm on the 2 hour chart right now. This chart, Aniko, is an indicator template. Okay. It has nothing to do with ETN candlestick. It just has more to do with like the cosmetic of things, meaning that remember I have 3 indicators. You know, a weekly one. I have a weekly higher time frame candle, and then I have a daily higher time frame candle. And just for whatever reason, you know, these boxes, if I'm on the 1 hour chart, they're gonna be the same. They're just gonna have 1 hour candlesticks inside. And just for whatever reason, I like it better there. Yeah, so this is just to kind of get those higher time frame candles seen. 4 hour just gives me the week, 2 hour gives me both. And then 20-minute gives me, you know, the sessions. And why don't I have the sessions, let's say for example, like on the 1 hour time frame? Well, if I have them on a 1 hour time frame, okay, oh, it looks somewhat cluttered. You know, it looks somewhat cluttered. Actually, it's not too bad in the hour. But when you start going to the 4 hour, the indicator starts looking very cloudy. Yep.
But if you have the SMT indicator on the 1 hour, then it would be a little more cluttered. Yeah.
Yeah, as well too. Let's see here, Joe. Let me get to that question there. 1 second. Joe says, interesting that price action ignored the rally base. Which rally specific, Joe? The daily one? And you guys can unmute if you need to.
On the 2 hour chart, it didn't it came down to your entry zone, but that rally base rally just below your entry zone.
Okay.
You see it?
Oh, let me see. I'm trying to see.
There's a
this one down here, not this one.
no, keep going up, 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 right there, down there.
Okay. Let's see that live chart. Hold on. I am on the 2 hour chart. Is it a different chart? Or is it this one?
No, it's that one.
Let me see.
Yeah, so there's a rally base rally, and it didn't come down to it. It hit your zone, but that rally base rally was largely ignored.
Gotcha. Wow. Are you talking about like this candlestick here, Dan? I really don't know. Joe, I really don't.
Yes.
Got it. Let's see. And again, it goes back to the fib levels. It does go back to the fib levels as well. We said
And
a lot.
technically it wasn't
Go for it, Dan.
ignored, Joe. The reason why it wasn't technically ignored was because we had this doji candlestick in here, which made it a higher wick. So there's like no real fair value gap to be indicated.
Mhm.
And so this candlestick was really not a good one to measure off of as a true rally-based rally. But well, if you take your candlestick, just the one candlestick, as G Money always says, pivot, comes back to the 50 retracement, bounces off, and continues up. So because this actually acts more as a break of
Morning
structure.
star. Want to be like a morning star.
Our Morning Star, take your pick. Break of structure, Morning Star, same difference. But the Morning Star, again, you just take this candlestick from low to high, fib it, and it probably comes down to the 50, and off the races it goes. But I think what G Money's making a point is no matter what time frame you're on, you're still looking for the impulse, the correction, impulse, correction, impulse, correction. Am I correct, G?
Yes, and this is the reason why I switch time frames, guys, a lot because I'm trying to find for those clean ETM candlesticks, as
And
Swenander
there it is
said.
on the 1 hour. There's your 1 hour.
Yeah, there goes the 1 hour rally based rally
Oh,
inside of what is this? Monday, Tuesday, Wednesday, Thursday. Pablo, creo que el martes, lunes fue que acumuló. Este lunes, martes, miércoles y
You
jueves.
want closer to the price.
Yeah, but you also asked that question a lot too, Mr. Ron, right? You know, why you change time frames a lot, G, right? Simply
Yes, sir.
because of that reason, right? I measured the previous day, what is this, Thursday, low to high, I put a fib on it. Let me put a line right here, look. Let me put a line right here at 50%. Okay, of this area right here, guys, right there. Okay, let me put that in green. So let's see how it looks on the 4 hour chart. On the 4 hour chart, it actually, there you go, Joe. See, on the 4 hour chart, that was a rally-based rally that came in and just touched the wicks of it. So that would have been a great confirmation right there. That's a very clean textbook rally-based rally. On the 8 hour chart, there really isn't any ETM. Like let's look for textbook ETM candles, right? There really isn't there. 12 hour chart on the green line in that green area, there's nothing there, right? So let's go back to the 4 hour. So it's there in the 4 hour, very clean. On the 2 hour chart, not the cleanest. On the 1 hour, that's pretty clean right there, right? Okay. 45 minutes, nothing clean on that price level of the green line. 30 minute, and that's the reason, guys. That's the reason for the madness. That's the reason why we go down the rabbit hole to find those ETM candlesticks at that price level of that green line. Okay. Okay. That's it. Nico said, "Oh, I never mark up the big wick like I don't either, Nico. I've missed trades because of that. I've missed trades because of those areas as well. So again, though, right? It all depends. Let's see, 15-minute chart, 10-minute chart, nothing, and now we're really going deep down the rabbit hole in these scenarios. And this is where I don't play like this. I don't look left too much like this on smaller time frames. But the cleanest one for me, in my opinion, was the 1 hour. That was it the one? Yeah, the 1 hour was the cleanest one, right there. If we put a fib on the base, that was the cleanest one that didn't even get touched, right? The wick did get touched, but not the not the actual candle. And the second cleanest one, I would say, would have been the 4 hour chart. But again, right? No wick. I know I don't mark up the wicks like that either, but it did come into the 38 and 50%. All right, guys. So, but yeah, this last week was very, very smooth. And let's kind of speculate, what's gonna move forward with the current week, and then we'll talk a little bit of SMT. Made a little update last night, and we'll carry on. All right, let's see. You guys get the emails, right? When I update this.
Yeah, I also got a notification on TradingView that you did an update as well.
Awesome. Yeah, just little updates here and there. What's gonna okay? Let's go to the indicator view. Nico, have you been using the templates? They work wonders. You may have to be follow me on TradingView, I think, Nico. And then this is you have the indicator, you should get that notification. Not sure exactly how that works. But if you're not using these templates, Nico, I highly suggest you do because I have an iPad, I have a Mac, and I have my phone. All three have the TradingView app. The indicators don't sync like on the fly as much as we want to. But if you have your indicator template, this is like a saved setting that all you got to do is just go to your iPad and then sync your indicators, and it all moves pretty well. Like I updated the template. You have to update it every time there's an upgrade. So I updated the indicator. Now it says SMT Ichimoku boxes 4.1. Go to my iPad. It's not there. I just simply click on the indicator template and click on my little box one, and boom, it appears right there. It appears right there. All right, y'all. So, yeah, I made some nice updates to this. More specifically, right? Yeah. So again, the indicator will only work on the 1 hour visually, 5 minute, and 2 minute chart. Okay. Friday's recording, I talk about the Oracle, the 15-minute Oracle, how it's coming back to the play. Okay. And the 15-minute Oracle is technically the midline of the 52 box, which we'll go into some details right there. Okay. But let me see if I can find the best example for us to take. Yes. Where was that setup that happened? Right here. This right here, okay, is the setup of the week. This was the setup of the week right here. All right, let me go ahead and hide this line for now. We'll just quickly hide the ETM candles. So, but you do have the most updated ETM candles, right? ETM candles 2.1. Those are the ones that are the most updated. And let me kind of just walk through the features of the box right now, okay? So the SMT Ichimoku boxes, right? There's 3 boxes. 3 boxes, a small one, a medium, and a large one. You can control the colors. If a box is bullish, it'll be blue. If the situation is bearish, it'll be pinkish, reddish. And if it's neutral, it'll turn kind of gray. This right here is the legend that turns that off and on down there. And the legend now is communicating only on this time frame, the structure, the momentum, and the timing. Okay, so why is it blue right now? Well, it's blue right now because it's the impulse is up, right? Prachi, the indicator, it's no, not invite only, that's a link. You do have to have the link. So we'll share with you here in a second and just follow it and add it to your favorites. But it's by link, and then that link can be shared to whomever needs it. It's not public though. It's not public. I try to make it public, but TradingView said can't. So that's why the structure is bullish, because the structure is the big box, okay? Or in other words, the 204 box, okay? The momentum is the 17 and the 52 box, right? And then the timing is this little arrow right there, okay? That's the timing. All boxes have structure, momentum, timing, but we're using the entire system together. So why is the structure bullish? Because we got the impulse to the top side, correct? Why is the momentum bullish? Well, because the 17 mid is above the 52 mid. Thank you, Daniel. That's the reason why it's bullish, okay? So that's that. Pips moved. Pips moved is right there. Okay, now we're right here on this section right there. Pips move. I think I have a little note here. What does it say here? Total pips move in the 17-hour window. What is the 17-hour window? What's the 204 box, the big box? Quick view of the progress towards targets. Thank you, Joe. Yeah, so this 256 pips is the range from low to high of the big box. And that's very, very important. Okay, that's very, very important. If you want to make those numbers bigger, you can go down to the display options and overrides, and just simply you can change the color to a more darker color, and you can also make these labels a lot bigger for your viewing pleasure. Okay, so that's that. Let me go ahead and continue. All right, so next, the 23 percentile lines, right? They're basically right here. Those are really, really important, right? This is where you can range trade. These are areas where we know how we use the 23% a lot. And those right there have the prices as well, right? If you need to hide them for whatever reason, you can hide them as well. Okay. So the projection lines, these are basically the extensions of the box, and these don't move, right? These don't move. These stay permanently there depending on what's in frame. Okay. So let's kind of read the notes of it right quick. Projection ranges define the pip distance thresholds used to draw targets 1 and 2 from the current 17-hour window, high, low. These defaults are based on the 21-day averages and are fixed in this version. Yeah, this is just notes for me, basically. So what does that mean? What does that crazy stuff mean? So in order for us to really understand that, you do have to turn on your range notes. Okay, you do have to turn on your range notes. And there it is. Okay. Okay. So just how I do the sessions, or just how I do, mark up the sessions, how many pips is left in New York, etc. This is the same scenario where we're just looking at this box. On an average basis, right? Gold moves between 358 pips to 425. Correct? That's on average. So this line up here, that one represents 358, and the line above for 425. Based on this box. So from the low and the high of that box is 256 pips, which is right there. If we stretch it out to the first line, there goes your 358 right there, 35.8. And if you stretch it out to the next line, there goes your 425, give or take. Okay. So as long as, but again, these ranges will not change unless, because it's tied up to this low. If this low now latches to this low, that's when they will change. Okay. But as long as this low is there, those projections will be there. And that's why the timing is important, right? Because they'll keep that in there. Dan, any way you want to summarize that for me, just to kind of put it in your own words to your understanding?
Yeah, it's just as like I said, it's pretty simple. We're just taking the as you'd say, as if you had fibbed this box, and just take the fib, and you're looking at the extensions. You're taking up the 382, negative 382, and the negative 618, maybe a little even higher. But when you add those extensions, they will show up, and there you go, through negative 382, negative, pretty close to where price can ultimately go.
Yeah.
Does that make sense?
Yep.
Yeah.
So it's like we're fibbing the box, guys. But again, the box extends up. This fib would also stretch. These lines will stay remain permanent. Okay.
Right.
These lines remain important. Also, one thing that I realized, one of the updates that I did, right, is just this box doesn't have a strong frame, and we'll demonstrate it here in a second. Let me turn off the range notes. We're good there. And then everything else, right? We won't go into all detail on this today. I just wanted to talk about those boxes, but that is important. All right. So this was the perfect setup for us today, this week, right? You see the bullet structure. Ideally, setup one is bullish. You put a buy limit at 50%. Okay. You can put a stop loss at the 78% if you want, or you want to give yourself more wiggle room. You put it down there, and then you take it to the top side. That's the ideal scenario. Okay. So you hit play, goes to 50%, gets your buy limit, and the next thing you know, it does buy, and the profit is there. The box is shifting as we're going, but it is what it is. And there, very near to take profit. And it hit take profit right there. That's the simplest way to enter this. Okay, the simplest way to enter this is entry at the 50%, take profit at the targets, or even so, you can take profit at the most high, right? That's right there. If you do that, obviously your stop loss to risk to reward ratio changes. So then what's the next best setup? Well, the next best setup is let the pullback finish. We want to trade with momentum. So we got to wait for the momentum to turn bullish. Okay, so right now the momentum is bearish. Let price establish itself, right? You don't have to get that Instagram entry. Let it establish itself. Let momentum establish itself. There it goes. There it goes. There it goes. Boom. Now we are momentum is bullish now. You see that? So how do you enter a momentum trade? Well, you enter at 50% of that green line or the 52 mid, and your stop loss goes there. Okay, and you can take profit there at the high, or you can take profit at the extension. Okay, you hit play, there it goes, and up it goes as well. Okay. Oh, okay, that's how that works.
And if you missed that one, you still got the 23% line as another entry level zone as well.
Mm-hmm. And that is if the momentum is still in our favor. Absolutely, Joe.
Correct. Yeah.
That. So yeah. So look at here, guys. Right. So you missed this trade, but the price established itself above the 23%. The midpoint line is over here. Okay. Now again, we're buying a little bit higher. So we may not get all the pips, but again, if you know how to capitalize it, right, you can make some money from it. And there it is. There it goes. Okay. So what's this new update that I did? You see how that box turned gray? And it's only for gold. So I've noticed that, and this is again, I noticed this on Friday. And then also I had a lesson on it from Wednesday, I believe. Okay. There it is, guys. Okay. So let me turn on the previous way this thing was reading. Yes, perfect. All right, here it is, guys. Okay. So in this view, right, the structure is bearish, correct? The structure is bearish. We trade mainly with momentum, okay? But when you see a big box that's red, it kind of makes you doubt yourself a little bit, right? Like, man, it's structure is bearish, structure is king type of thing. So what I did was I kind of did some calculating, and if the structure is less than 200 and so pips, instead of coloring the entire thing red, Now it's gray. Communicating to us what? Yes, the structure is bearish, but it's like a weak structure, correct? It's a weak structure.
Oh, that goes back to what we were talking about when we were looking at this line staying between the 250 of the 250 of the 204 and the 23 of the lower. So that goes back to that conversation we had the other day, right?
Yeah, that's you're basically looking at the early signal, Dan. Yes, that's the advanced early thing, right? That is the
Yeah.
advanced. If this 52 cannot get below that 23, the 17 is not pushing strong enough to bring it down. But yes, that is exactly correct. That is one clue. Visually, just for color purposes, right? The moment the momentum turns bullish, and that's gray still, right? It makes a big difference, guys. I mean, it makes a big difference. Look at this. This view, right? This view, this makes you question the momentum, right? This makes you question the momentum. This right here is like, okay, let me give the momentum a shot, right? So when the pip count is 200 plus, then the color of the big box changes. Yes, Aniko. Yes, it does. Yes, it does. And only for gold. Only for gold. Okay. This setting is only for gold. So all this is saying, right, that this is the weak pullback right here. This is a weak pullback. And obviously this is, we look at we go back a little bit. If we look at structure, impulse, correction, impulse, that is just a pullback. But a lot of times, right, I'm trading in the direction of the big box. Well, not trading. I'm marking up my chart in the direction of the big box, and then I use momentum to trade it. Make sense? So with this view, when things turn bullish momentum wise, I go, okay, I'm not so attached to the big frame already. And then here, you see, Nico, it went plus. I think it went plus.
Yeah.
Go for it, Ron, Mr. Ron.
Well, you still had that red
Oh,
52
yes.
midline. So how does that play? In your scenario now.
We said this on Friday. We've been kind of saying it. Remember, momentum, mother knows best, right? So this red line at the same time, we would love for it to get above, right? We would love for it to get above.
So do you wait? Do you wait? Is my question? Do you wait until it turns?
I would like to say ideally yes, Ron,
Mm-hmm.
but momentum can take price up and we can help. It'll make us miss the trade. Look at that.
Mr. Okay.
You see, it'll miss it. It'll miss it. Great observation there, sir. Hold on, guys. All right, perfect.
And so basically, it's an indication to say, hey, let's look for something might be trade entries might be happening. We may
Okay.
not see it come back to these lower levels. So that's when you start looking at the entries at like here and
Yes.
here and even up here. So yeah, I get you.
And then and what Dad just finished saying, Nico, how do you jump into the speeding train, right? You use the 17 box. You use the 17 box, right? The 17 box is the one you use. And you can enter at the 50% of that box and then take it to the extensions. Let's see here. Nope, price never came back to it and just push back up. Another way that we like to do is that when price establish itself above the 23 percentile on the 15-minute chart, right? There it goes. Rally base rally, 15-minute candlestick closed, right? Momentum is still there. We still got some range up there, and the same, and we go back to what we did back to the beginning, right? You fib a candle, you fib an ETM zone. There goes our entry zone at the blue area. Take profit to the extensions or take profit to the actual box extensions. Let's see what happens here. It barely missed 38%, but it touched 23, and there it goes. Right, and that's what means trading with momentum, guys. Right, it's like a speeding train, Aniko. Trading momentum is a speeding train that once you see everything else line up, once you get in, you're not going to get a pullback, basically. Right, it's like, oh man, this thing is just ready to take off, type of thing. Right, this thing is ready to take off.
And that's the
Let me
one
ask you
reason
a
I've
question.
been relying on the 23 line for entries more so than the midpoints, because I know at some point this is definitely going to be, that line will be come back to it, whether it's even one candlestick, one wick in. It may go a little bit lower, but not too much further.
Mr. Ron, were you going to say something?
Well, I just real quick, it's not pertaining to this, but Friday I was on the Spanish call. I missed the bullish run. I missed that BEC that BEC that was there. I think it was on the 5 minute BEC. Did you guys get in off of that 15
And
minute?
see, Mr. Ron, that's the thing. So here's the thing. I did not get in there with confidence because on Friday the box was still like this.
Okay.
You see, it's hard for me to get in there with confidence because I see this big old frame, right?
Right, okay.
Red. And that's the reason why it was that update. Because
Oh, okay.
the exact same scenario happened to me, I believe, Wednesday, right here. Right here. Look at this. I was looking to buy somewhere around 33.65 on Wednesday. Okay. Like, all right, we got some pips to the downside, about 80, 90 pips. All right, I'm gonna take profit there. And then I'm gonna sell towards there and then buy from there. Okay. Everything is there, right, guys? Structure bearish, momentum bearish. Okay. But how many pips is there? 200 pips. So heck yeah, let's go for sales. But with this new update, I'm still looking for sales. But when this starts to happen, right there, you know what? Mom wants to buy. Comes back and retouches at 23%.
Mm-hmm.
And then next thing you know, it actually is interesting. It does go a little bit lower.
But not by much.
Not by much, but the momentum did not change.
Exactly. That 52 box held like a fiend, and
And there it is, guys. Mom says, I want to go to the mall, so you take her to the mall.
Got it.
now the interesting thing is, like I said, gold had such a runaway. We never saw this in between zone pattern that we would sometimes see, But I just said, later, guys, we're off. We're out.
Yep. Yeah, so see, I wanted to buy from down here, but momentum said no. Liquidity was down here, but momentum said no. Fair value gaps were down here, but momentum said no. So, as we say, right, mother knows best. Yeah, good examples, guys. Good examples. This thing works exactly the same on the 1 hour chart. The only difference, right, is that the 1 hour chart takes longer. But it's really important for us to know, how the 1 hour chart looks as well, Okay, just kind of keeps. I don't even know, Nico. I mean, honestly, I don't even look at news to be honest. It's just been a very long time since I connected the news to the
And not
charts.
only that, was the last trading day of the month. So, people are closing their positions
Hmm.
are open, and especially the sell, people that sold that high, they're wanting to close those positions.
Hmm.
Uh,
This is the 1 hour chart here. You know, now one final note here. Remember, the 1 hour small box is connected to the 5 minute big box. Okay, so why is that, right? So we'll do it from here, right? So there's 204 candlesticks, correct, on the small box. Everybody agree with that? Okay. There's
you mean
204.
4 in the big box?
Yeah, sorry, 204 candles
Yeah.
on. What was I gonna say? 204 candles on the 5 minute big box, right?
Mhm.
All right, so let's kind of do some math, right? 204 candlesticks times five. How many minutes is that?
1,000 20 something like that.
1020. Yep, exactly right. So it's 10, 20 minutes. And then you divide that by 60.
Don't ask me. I don't know.
Oh, it's 17 hours. Everybody got that?
Yeah,
17 hours. So this is the big box on the 5 minute chart. Everybody got that? So the small box on the 1 hour chart is the same as that box. So they're connected. They're connected. So we can technically see the small box from, excuse me, we can technically see the big box of the 5 minute from the 1 hour view. Right. So that's how they're connected. That's how they're connected. Everything's connected. All right. So um, but here's the 1 hour time frame. Obviously, the same formula: 204 candles, 52 candles, 17 candles. Okay, we're above the midpoint. Everything is saying bullish. Okay. If mom knows best, this is grandma knows best right here type of scenario, right? And it is just for stats purposes, Nico. I mean, we really don't need it, but it will just kind of keeping you connected there. Um, but we'll explain it again. And there goes, guys. Same thing. Price never got below that midpoint of the 1 hour chart. This green line never got below that. Price just stayed above it, and that kept the averages up, 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 up. And that is where the oracle comes in, right? The 15-minute oracle. The 15-minute oracle. So if you go to the ETM candlesticks and you turn on the oracle, I only have it visible on the 5 minute, and in this scenario, the 1 hour, just so you guys can see. There goes the oracle right there. Excuse me. The oracle is that 52 midpoint, okay, of the hour. So they're the same. There's not much help here on the 1 hour time frame, but it's a heck of a lot of help when you go to the 5 minute chart. Because this on the 5 minute view, this is telling us that we're above the 52 midpoint of the 1 hour chart. So it's kind of keeping two time frames in connection. And then little by little, I mean, Dan's been saying that he doesn't change time frames anymore. We technically don't have to because the green represents the midpoint of the 52 mid of the 1 hour time frame. And as long as we're below it, it'll be red. If we're above it, we're green. and we just use momentum to help us trade. So see, this week was all buys, all buys. Any sell is just a pullback. Any sell is just a pullback.
And that's why I'm looking for price to come back and at least test that Oracle.
Yeah,
This
let's do the top analysis then. We'll wrap
Yeah.
it up with that. Let's wrap it up with that. Anybody have any other questions right now that they want to ask before we move on? We good?
Okay, I'm looking at my charts. I got two green lines so I must have something not connected.
ETM candlesticks. Yeah, go to ETM candles settings
Yeah.
and go down where it says Oracle. Oracle 1, make sure it's off. Make sure it's off.
Oracle 1.
Off. Okay. Oracle 2, the Oracle Reloaded. I would just keep it on the 5-minute. You can make sure it's a calculation time frame 15-minute. And here you
So I take off the Oracle and then put Oracle Reloaded.
correct.
But it's still showing.
Yeah, I got you. And then make
green
sure it's
lines.
in the 15-minute time frame. And then from there, make sure you only have a 5 in there, so you can only see it on the 5 minutes. Okay.
Yes, sir.
The second line that you see, Ron, is the lagging line. That's
okay.
That's the. So let me turn mine back on. 5-minute. There goes that second line.
Okay, that's it. Yeah, okay.
Yes. So I'll go ahead and explain this right now. Okay. So basically, this is all connected. Okay. When the candlesticks are above the oracle, right, and the lagging line is above the oracle, is nice and green. Okay, nice and green. Everything is bullish. Okay.
Right. Okay.
Everything derives from the cloud, guys. Everything derives from the cloud. Let me give you a different example here. So that means, so check this out here. Okay. Let me hide the boxes. You see right here, it was red, but here it's like a neutral color. Why is it neutral? Well, the candlesticks are above the lagging line. Excuse me. The candlesticks, yes, are above the oracle, but the lagging line is not above the oracle, and therefore the I guess momentum.
But it's also above price, so it's in between the Oracle and the price. So that's what I noticed. So it makes it easier to see because as long as the lagging line is above price and below the Oracle, I found out it's usually that neutral color.
Correct. And I think the coding for that, Dan, is just basically we need this to get above there.
Exactly.
Yeah. So then you hit play, and again, this is just kind of me breaking it down to you. And you see it right there. It peaked a little bit. You see how it peaked just above, and therefore that turned green right there. But again, we were still hitting a wall, a ceiling, excuse me. And then once price gets below, let's see. Oh, there it goes. There it goes. See, it turned green. It turned green because now both the lagging line and price are above the oracle. Okay. So, and just so again, we don't really need the oracle, Ron, just for visual purposes. It'll still work. So I have mine off, and that's how we get to one.
Oh, okay.
Yes, sir. Let's do this top-down analysis, guys, and we'll send everybody home to enjoy your Sunday. Let's find the right chart. Weekly outlook, yes. I do not want to be in Oanda.
We need that back on Monday.
I'm sorry?
I said Dan's study group, we need that back on Monday.
Oh, yeah. Yeah, for sure. We'll be there Monday. We'll be there Monday.
Oh, yeah. Just bring the questions and remind me.
All right. So let's analyze a couple of things, right? I still want to keep into consideration the monthly candlestick. April, even though we had a strong bullish August, right? We still have not engulfed, right? The month of April. So we put a fib on this. The one thing I do like though is that we closed above the 23%. All right. So I'm gonna keep that in the back of our analysis there. Let's see. That 23%. Oh, right there. Okay, so that's the 23% of the month of April. All right. So now let's go back to our regular analysis. Okay, the 23% is the thing. So let's take the previous weekly candlestick. All right, we'll take the low, previous weekly low, previous weekly high. Okay, and then the open is actually right at that 23%. Very interesting, that. Very interesting how that works.
Yeah, I
All
was
right.
gonna say that, yeah.
Let's go on the 4-hour. From the weekly, we immediately go down to the 4-hour chart. Okay, and then we look at the edge of these lines, like so. Let me see if I can.
How
Yeah.
pretty is this? Doesn't get prettier than that, G.
What you see, Dan?
BEC right there.
Mhm.
Doesn't get
Yeah, the
prettier.
moment we establish ourselves above, guys, at 23%,
Yeah.
it was to the moon. So I'm only gonna focus from the edge of these lines to the right. Okay. And there really isn't any structure, right? This is just still one impulse to the top side. Okay.
If that.
So we may need to get a pullback on a smaller time frame. We'll fib low to high, as we always do. Previous weekly candle. There it is. Let's see if the momentum is aligning in this direction on the 1-hour. And it is, okay? The momentum is aligning. Nice and strong momentum to the top side in support of that weekly candlestick. So I do like it, okay? I do like for us to continue going bullish. I'm not looking left too much anymore, right? I'm basically just looking what's here. We'll use momentum to catch pullbacks, right? Not too far left, even though we did get all these highs, right? We do, we'll use the momentum, right? So let's go to the daily now, okay? So the daily view, just turn this up here. The daily view is like this, okay? It's very, very strong. 1, 2, 3, 4 consecutive bullish days, right? Now you may say, well, we may need a pullback. True, but if we go to the weekly chart, technically it's been 2 consecutive bullish days, right? So that may just be a pause on the daily, and then the weekly wants to complete that third strong push to the top side. Alrighty. So I am more favor of us getting waiting for the pullback to finish. We do have a nice little rally-based rally down here on the daily. Let me mark that one up. And here's kind of where I'm marking up those ETM candles on this daily time frame. So daily rally-based rally, which is at the previous weekly open. So I do like that. 12-hour. Well, you know what? We may not come back down there. Why? Well, because we have a rally-based rally above it. All right. So then here is the potential entry for us. 12-hour rally-based rally. All righty. 8-hour. Okay, perfect. It's an 8-hour and a 12-hour rally-based rally. 4-hour chart. We got a break of structure candle here, Joe. Not Joe. Dan, give or take, right?
Yeah, it's
BC.
a good break of structure candle. I'd take it.
So it's all connected there. Very nice. We'll mark it down though. 2-hour, 1-hour, and then here, yeah. I mean, I think that's the zone, guys. I think that is the zone that will give us approximately a 38-50% pullback area, and we can definitely buy from there. But if momentum says no, we'll go a little bit higher first, and then we potentially can come down. But other
So
than
we
that,
definitely want to get that test of the 236 and see what happens there.
yes.
And then from there, make our, but yeah. If we do get any kind of a pullback,
Mm-hmm.
and if you go to your 1 hour view, there we got that nice one, two. How many can measure this impulse right here from down there, basically. We got a 23% retracement already. So we got the
Yeah.
impulse came back 23%. We might not see anything lower.
Correct. And on this 1 hour view, I like how the 52 mid is connected to this area right here. So that's good as of right now. Pablo, I think the chart that you shared with me, I think I see if this does not give us the pullback, I see the harmonic here, X, A,
Mhm.
B, C, and if we can overextend, right?
And that'd be D. Yeah.
The D. So that'll complete that crab extended harmonic,
Hmm.
right? And then from there, right? Price had so much momentum that it continued buying. Everybody's looking to sell right now for whatever the reason, because we do quote unquote right need a pullback, right? But momentum, we saw it, guys. We saw it. If momentum says no, momentum says no. All right. So we'll take it to the extensions first, and then we'll see when that pullback comes. But ideally, I would like for us to come back to the 38%, the 8 hour rally base rally, and go upwards, ideally. And if it doesn't give us a pullback, we'll trade intraday in the other direction. We'll trade momentum to the top side, and we'll target the zero up there. But that's the markup for this week. Gold weekly outlook. And there we have it, guys. Well, this concludes our Sunday study group for August. We'll return back in September. We'll give you guys the date when Marcus Morpheus McKinney will come in for September, so we can do our ETM session with him. And yeah, appreciate the support, and any updates or anything, please stay tuned to the Discord, the schedule. Let me know if you have questions about it. We'll go from there. Appreciate everybody's support, and we'll see each other in a week. Thank you.
All right. See y'all tomorrow. Bring your questions. Looking forward to it tomorrow.
Oh, that's right. Yeah, go ahead and Dan announce your
Yeah,
study
9 o'clock
group.
Central Time tomorrow evening. Our study group as usual, Titan Circle. You can get recaps on danhansen.com, or I will always post the links for the videos in our chats too.
All right, Animal. We'll see you guys later. Bye bye now.